Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's a short week for us, but it's actually a very busy week on the trading front. Lots to look out for. The Fed futures closeouts. Do you think these are going to be the big sort of directions, or the big events that are going to influence our market?
Yeah, very much so. I mean, I think all traders globally have got their eyes on the Fed this week. The FOMC meeting starts today and it finishes tomorrow, being Wednesday, and then we'll get a statement from Bernanke after that. And what really will be very closely watched will be to see whether he gives any hint at when this tapering off of quantitative easing might begin. Because at this stage, the jury really is out in terms of how soon they might look to taper off. So that's going to be very interesting, and that's going to be very market moving, and we'll only know that really at the end of Wednesday afternoon on our market. So we'll then probably feel the consequences of that on Thursday. And Thursday is then also an interesting day because it's the futures closeout locally. So that always creates a lot of volume of trade and quite a lot of interest. And then Friday we've got a major rebalancing of some of our indices on the JSE. So it is quite an action-packed week. There's certainly a lot to look out for, and it's going to be an interesting week in terms of the trading spectrum.
We'll get to the index rebalancing in a moment because I know you've got a couple of charts, but maybe let's go back to one of the most recent trades that you had for the portfolio, and that was Anglo-American. Of course, last week it looked as if it was on a one-way ticket to 200 Rand a share. How have you profited from the direction in which it went last week?
Well, that's right. It did look as if it was on its way to 200 Rand, and I was so confident. I even sent out a tweet with a chart and everything. I said, here we go, 200 Rand, here we come. But alas, that was short-lived, and the stock quickly reversed up and made me sort of rejig my thinking slightly. So let's have a look at it. The chart of Anglo-American is up on the screen at the moment. What I've been going on about now for the last 2 months or so is the fact that the stock remains below this important level of resistance, which is at 237 Rand. Now that goes all the way back to sometime in 2009. So it's actually a very, very significant level. And the stock continues to consolidate underneath that 237 Rand level. Can't really break above it with any conviction, which to me makes me think this consolidation still will probably end up resolving itself to the downside at some point. But really, for the time being, it's locked in a channel between 215 Rand at the lower end and about 237, 240 or thereabouts at the top. And it's stuck in that range, as you can see. Now, what we did for this portfolio of ours a few weeks back was we shorted 390 CFDs at 231 Rand 90 with a stop loss at 242 Rand. And the view here really was to see the stock breaking lower and moving down towards a lower target. It's gone down twice. It's gone down to the bottom of that trading range at 215 Rand twice, and last week it did it again for the third time whilst we've been holding this share. So eventually I decided that it was probably time to bank a bit of profit on it because it did reverse back up off that 215. I think it traded almost down to about 213, and then it reversed back up.
And obviously quite quickly, given where you cashed in some of the
well, that's it. So the following day, after we had actually received a reversal signal off the bottom of that trading range, I then decided to actually cut half of this trade. So we still got half open, but I've basically bought back 195 CFDs that we were short, and I bought them back at 219 Rand and 30 cents. So for that half of the trade, it locks in a profit of 2,281 Rand for us, which is decent. And we've still got the other half of the trade on in the event that the stock does break to the downside, which I must say I still think is very likely at some point. But I felt it prudent to lock in a little bit of profit nonetheless now at the bottom of the trading range.
Yeah, well, maybe just going back to the points about the Fed's going to be really important this week. It could be really important even if he says nothing at all. So to some extent, does it depend on the tone and the mood of the market? And what do you think the mood of the market is at the moment? Or is it actually impossible to say at this point?
It's difficult to say, but I think that there's certainly been a fair amount of a view taken. I think that we're going to get some sort of tapering off. And it's now a question of when, not if. And the when question is, well, is he going to announce it this week? Or is it going to be in 3 months' time or 6 months' time? And I think that's really the debate that we've got at the moment. To some extent, I do feel the market has kind of primed itself to a certain extent for a sooner than later tapering off, maybe. And if he comes out with something different, you could find there's potential for a short squeeze based on that, because I think there's been some short positions put on that basis. But I mean, that's my feeling. I might be totally wrong on that.
Yeah.
We'll have to see what he says come Wednesday afternoon, evening here.
Okay. And Garth, talking about the index rebalancing, you said you had a couple of charts, so let's have a look at that now.
Yeah, well, this is now what happens every quarter is the JSE, the FTSE JSE Indices Department meets to reweight the indices of the JSE. And the way the indices are calculated on the JSE are based on a free float mechanism. Free float meaning that they look only at the shares that are freely available for trade in a company at any given time. So if you think about a company, for example, like Anglo American Platinum, that is very tightly held. It's about 80% owned by Anglo American PLC. So therefore, only the other 20% that is freely tradable in the open market is calculated as part of the index. All right, so that's what free float means. Now, you get adjustments to these free float indices from time to time based on a variety of things. It can be because of corporate actions. It can be because a company's issued new shares. It can be because of a share buyback, that sort of thing. So there are a couple of reasons why the free float can change. Anyway, what I've got on the screen at the moment is a table that includes the most significant reweightings that are going to be happening this week. And these weightings become effective from the 24th of June, which is next week, Monday, which means that any tracker funds that track these indices need to have adjusted their positions by the close of business this week, Friday, being the 21st of June. So here you can see some of the more significant ones. Aspen is losing, the difference is 19%. Its free float is declining. Grindrod is another one that's caught my eye quite a lot. It's declining, but its free float by 15%. And you can have a look at all the others there. Those are two that really stuck out for me as potential trading opportunities, because there's likely to be a down weighting of Aspen and Grindrod in those indices. And once that selling pressure abates this week, you may find there's a potential for a rebound in those share prices.
Okay, which kind of takes us to almost.
Yeah.
You've got another chart, sorry.
I've got one more chart before we get on to our trade of the week. This is the index constituent changes for this week. And there you can see the major indices. Top 40, there's no change. In the mid-cap, there's a change. In the FINI 15, there's an interesting change there. Capital and County Properties comes in for Liberty Holdings. And that's largely because Capital and Counties has moved up so much recently based on the weaker rand. Remember that company is listed in London. And Liberty Holdings rather, is falling out of the index. And you've seen Liberty Holdings coming under some pressure in the last week or so based on that. No major changes in the FINI or in the industrial index. In the Resi index, we've got Assor coming in the place of Lonmin.
Yeah, which is quite interesting given that Assor was such a strong stock last year, then lost ground, but obviously it's picked up again.
Yeah.
Okay, Garth, so as I said, it leads us into the trade of the week, and that is Aspen, which is to some extent a bit of an old favourite for this portfolio.
Well, it's an old favourite. It's a little bittersweet sometimes. Remember, it hurt us in the beginning of this year, but last year it was a phenomenally good performer for our portfolio. Anyway, I'm back having another go at it. What I've got here on the chart on the screen is a chart going back over the last 2 to 2.5 years of Aspen, and what you can see there is a very, very well-defined upward trend. That stock has fallen quite a lot recently. From a high of about 220 Rand, it's fallen down to 180 Rand. So that's a very significant pullback for that share price. And you can see the support level there at 180 Rand that I've spoken about. What I want to now do is just zoom in on that area that I've put in a dotted block around that area there and look at that trade over the last 5 or 6 months or so. Now there you can see our long-term uptrend, which comes in at 180 Rand a share. It also corresponds with the lateral level of support, which also comes in at about 180, which joins the lows from the middle of April. The stock is very oversold based on that stochastic oscillator at the top. And what you can see is that certainly over the last week or so, we've had relatively high volume trading in this share. And I'd imagine that's partially because of the reweighting that we were just talking about. And for all of those shares that are being sold in the rebalancing, obviously some of them are also being bought as well.
Yeah.
So what I've decided to do here for now is I've bought half of our position at 181 Rand 60. I'm using a stop loss at 177 Rand. And then what I would look to probably do is, if we see a breakout above that little downtrend that I've just drawn in there that goes back over the last couple of weeks or so, that comes at about 192.50. If we were to start breaking above that trend line, then I'd probably look to add another half to this position. In other words, add on the way up. I'm a big believer in adding to your winners, never add to your losers. So that's what we would look to do here. But for the time being, I've done this trade last week already, bought at 181 Rand 60.
And you must be smiling today, but take us through the mechanics in greater detail.
All right, so I've bought at 181 Rand 60. My stop loss is at 177 Rand. That means that I'm willing to risk 4 Rand 60 per share. The risk that I'm taking is only 1% of our account at this stage. Remember, I'm only doing half a trade, half size at this point in time, which is 2,770 Rand. I then divide the portfolio risk, divide it by the risk per share, as I always do, and it gives us a number of 602 shares, which if I round it off gives me 600 CFDs. My minimum target here is 200 Rand a share, and my risk to reward ratio therefore is 1:4, which is a pretty healthy risk to reward ratio in the case of this trade.
So even despite, I suppose, the recent sell-off, would you say that, and given the uptrend that we've seen going back 2 and a bit years, that Aspen is still one of the strongest stocks?
I think it is, yeah, it certainly is. I mean, this has been a pretty healthy pullback that we've seen. It's pulled back 40 Rand a share. But definitely that uptrend is still very much intact. We've seen the stock moving up off that uptrend support level that I'd identified. So, you've got to obey the trend. The trend is your friend until it bends. That's the saying. And absolutely I believe that. That trend has to be assumed to continue until such time as it proves otherwise.
Garth, and just another point you made about adding to your positions on the way up. It's very tempting, isn't it, to add on the way down, because you think, well, I bought the share at this price, I believe in the company, this is the story. If it drops, it's a cheaper price, therefore I'm going to pick up more. Just tell us what you think about that way of trading, and whether that can actually pay off for you ultimately, or whether it leads to financial ruin.
I've seen it lead to financial ruin on many occasions. Sometimes it can obviously pay off for you. But generally speaking, my feeling is that averaging down is a very bad habit to develop as a trader. The thinking is that, or my thinking anyway, is that you go into a trade thinking it's going to work. If it doesn't work, why, clearly you've got a problem on your hands. Why would you then go and make your problem even bigger by adding to that trade? So for me, averaging down is a no-no. Averaging up, averaging into your winners is a far safer strategy.
Okay. So, Garth, what does the portfolio look like then at the moment?
Right, it looks like this. So we've still got our put spread structure open, which expires this week, Thursday, at the futures closeout. We've got half a position open in our Anglo-American short there, where we did lock in a partial profit. And then we've got our Aspen trade, which is working out nicely for us. So the portfolio now is sitting just short of 280,000 Rand. So we're up 11.8% for the year. So looking quite good at the moment.
And just going back to the put spread structure, I suppose last week when things were all going, or looked as if they were going massively pear-shaped, I got quite excited about that and thought maybe you're going to be in on the money on that, but it doesn't look as if it'll actually pay out. Huh?
No, it doesn't. Our top 40 is trading at about 36,500 at the moment, and that structure only kicks in at below 34,000. So, that's 2,500 points lower than where we're trading now. I really can't see that happening between now and Thursday.
Unless, of course, Ben Bernanke says something exceptionally horrible.
Yeah, stranger things have happened, but I think that's an outlier type event.
Okay. All right, so Garth, not too bad, up almost 12% for the year to date. Let's hope we can add to those gains. And then just to end off, your next course. Yeah,
my next course on learning to understand CFDs is on the 4th of July in Johannesburg. Anybody that's interested in attending that course can email me, garth@traderscorner.co.za, and I'll send you the details.
Okay. Great. Garth, we have to leave it there, but thanks very much for joining us this evening. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.